It's Wednesday the 4th, I'm FX Blue and this is CurrencyTransfer.com's market update. So the main headlines are that sterling is building a relatively stable base above the 140 level against the dollar again. The dollar itself firms ahead of non-farm Fridays and the euro rather lacks any fresh drivers. Yesterday in the UK we saw manufacturing PMI data come out for March. It was stronger than expected, posting 56.6, well above the 50 level that indicates expansion in the sector. The air of optimism continues with Brexit remaining out of the headlines, and traders shift their focus towards economic developments and monetary policy outlook. Yesterday's PMI data was another building block in the case for a rate hike next month. Cable is hemmed in between 140.20 and 141, and it looks like it may be set to remain in that range ahead of non-farm payrolls. Nothing new to report in the trade war. Despite the threat remaining in the background, the dollar managed to consolidate its recent improvements, and the dollar index has held over the 90 figure, no doubt helped by the lack of liquidity and activity around the Easter holidays. Non-farm Friday is breeding a degree of optimism for the dollar following the February's data that was far stronger than expected. Non-farm payrolls is notoriously difficult to predict, as I aptly demonstrated last month, getting it woefully off the mark. However, March's figure is forecast for 200, but that's what they called last month. But maybe that's a signal I should be more bullish this time in the sweepstake. Help would be appreciated, so pop your indications in the comments below, please. Meanwhile, the euro is lacking any positive factors at the moment to drive it higher. Optimism over any optimism over monetary policy is quickly quashed whenever Draghi speaks. He's made it very clear that unless there's an overwhelming reason to the contrary, monetary policy and the asset purchase scheme is likely to remain unchanged. The net effect is that euro dollar has fallen to the lower end of its trading range. Yesterday it saw trade between 122.50 and 123.45, but there equally seems little interest in testing the support at 122.40. There are a few bits of data out this week, including inflation expected to remain about the 1.1% level. Unemployment is expected to fall to 8.5%, down from 8.6%, and retail sales is likely to have improved considerably after disappointing data last time. Anything relevant, of course, will keep you posted. Otherwise, stay tuned for tomorrow's update. All the best.